So now let us discuss another complicated itemized deduction, which is losses. So just like any other itemized deduction, losses has also several tax rules that govern its deductibility. So that will be covered in this discussion. So for tax purposes, we have two types of losses. So these are ordinary loss and capital loss. So the loss classification is based on the two types of assets for tax purposes. So which are ordinary asset and capital assets. So basically, when we say ordinary assets, these are assets used in business, and when we say capital assets, these are assets that are not used in business. And the losses that resulted from the transaction involving ordinary and capital assets are different. So the tax treatment would be different. So our focus in this discussion is ordinary loss. However, we will have a brief discussion on the capital losses. However, the detailed discussion for the capital loss will be under the topic dealings in properties. So there are several transactions where losses may arise. So one is the disposal or destruction of the asset. So if the asset is an ordinary asset, so this will be our deductibility. So in case there is a destruction and the destruction is total, when we say total destruction, the asset is beyond repair and the and there is no other recourse but to replace the destroyed asset. So when there is a total destruction, the loss that will be deductible will be the amount equal to the book value or the tax base of the destroyed asset. And the amount to be capitalized will be the cost to replace the destroyed asset. However, if there is a partial destruction, when we say partial destruction, the destroyed asset can still be repaired. And the loss that will be deductible for this purpose is the amount lower between the repair or restoration cost and the tax base of the part destroyed. However, if the restoration or the repair cost is more than the tax base or the book value of the destroyed part, any excess would be capitalized. So when we say capitalized, it will form part of the depreciable cost of the asset and shall be deductible through depreciation. Again, the capitalized amount will only exist if the restoration or repair cost is greater than the tax base. And again, when we have a loss, it can be reduced by any proceeds from insurance received by the taxpayer. So the amount of insurance will be deducted from the loss suffered by the entity, and the remaining loss after the deduction of insurance shall be the amount deductible from the gross income. However, if the proceeds from the insurance exceeds the amount of loss that is suffered because of the destruction or disposal, any excess will be a taxable gain. Then again, following the related party rule, losses are non-deductible if these are suffered from transactions with a related party. Then for gambling losses are non-deductible, which means they cannot be deducted from gross income since gambling losses is not business related. However, since gambling winnings are taxable, because there is no requirement as to the source of income. As long as it is an income, it will be taxable. So for the purpose of taxability of the gambling winnings, it can be reduced by the gambling losses. So the excess of gambling winnings over gambling losses shall be the taxable gambling winnings. So which means that the gambling losses cannot be deducted from the gross income. However, it can only be deducted from gambling winnings. So which means that If there is a gambling loss, however, there is no gambling winnings to cover the loss, it cannot be deducted from gross income. Again, because the gambling loss failed to comply with the requirement that expenses must be necessary and ordinary in the course of the business of the taxpayers. So now let's continue by answering an illustrative problem. So Ku Chan Song, a resident alien, has the following information during the year. So the requirement is to compute for the taxable income. So we have gross receipts of 3,200,000, cost of services of 1.28 million, and itemized deductions except losses of 512,000 pesos. Then for the losses, we have gambling losses of 25,000 pesos. Decrease in fair value of equipment, 20,000 pesos. Increase in fair value of land used in business located in Quezon City, 15,000 pesos. Then we have a loss on sale of land used in business located in Marikina City, 8,000 pesos. Then loss on sale of painting costing 100,000 pesos. Then the loss is 12,500. Then loss on sale of machinery to ABC Company, where Ku Chan Song holds 60% of stock ownership. So that is 60,000 pesos, and cost of inventory destroyed by fire, which has a salvage value of 5,000 pesos. So the cost is 19,000 pesos. Then during the current year, a storm hit Chan Song's place of business and spent repairs and maintenance costs for several properties that were destroyed. Then, moreover, Ku's machinery with a book value of 35,000 pesos also broke because of the storm and is beyond repair. Ku decided to buy another machinery for 29,000 pesos. So first, before we compute for the gross income, let us determine the amount of loss that is deductible from gross income because we have several items of losses here. So now let us start. The first item we analyze is gambling losses. Again, as I have discussed, gambling losses are not deductible from gross income, but it can be deducted from gambling winnings to determine the taxable gambling winnings. However, we only have data about gambling losses and there is no gambling winnings, which means that the gambling losses is non-deductible. Again, the reason is deductible only from gambling winnings. So another item of loss is the decrease in the fair value of equipment. So when we say decrease in fair value of equipment, the equipment is still in the possession of the taxpayer. However, the fair value of the equipment just decrease maybe due to internal or external factors. However, the equipment is not yet sold. So what is the treatment for decrease in fair value of a fixed asset? So for losses of useful value, so the loss in value due to technological changes or new legislation, the loss shall only be deductible when realized. So when we say realized, it means that the fixed asset is already sold and the loss is actually suffered. So that is the time the loss becomes deductible. So if the fixed asset is not yet sold, the decrease in the fair value or the loss of useful value is considered unrealized and it is a non-deductible loss. However, except when the asset involves building and machineries that are permanently abandoned. So same goes with shares of stock. So losses due to shrinkage in the value of stocks. Once the decrease in the fair value is unrealized, it is still non-deductible. Again, when we say unrealized, the loss is not yet actually suffered because it is not yet sold. So by the time the shares of stocks are sold, then the sale resulted to a loss. That is the time the loss is a realized loss. So that will be a deductible loss. So which means that the decrease in fair value of the equipment is a non-deductible loss because this is an unrealized loss. The next is the loss on sale of land used in business located in Marikina City. So this is a realized loss because this is actually suffered because the land is already sold. So which means that the loss of 8,000 is deductible. Then again, the loss on sale of land of 8,000 is deductible because the land is an ordinary asset. Again, when we say ordinary asset, these are used in business. Because if because once the land is not used in business, so this is a capital asset. And if you remember that land classified as a capital asset is not subject to normal tax. Instead, it is subject to final tax, which is the capital gains tax. So that is why for this particular land, it is subject to normal tax. That is why the loss is deductible in full. Then for the loss on painting, the painting is considered as a capital asset. So because this is not used in business. And since the entity has a gross receipt, so which means that the taxpayer is engaged in service business, so the painting is not related to the conduct of trade or business of the taxpayer. So that is our assumption. So that is why the painting is a capital asset. And what is the rule on capital asset? So the loss on the sale of capital asset is not a deductible loss from gross income. It can only be deducted from capital gain. Again, why is it not deductible from gross income? Because capital loss fails to comply with the requirement that expenses must be related to business. It must be necessary and ordinary in the normal course of the taxpayer's trade or business. So which means that the loss on the sale of painting for 12,500 pesos is non-deductible. And what is the reason? It is only deductible from capital gains, and we have no capital gain in the information. The next is the loss on sale of machinery to ABC Company, where Kuchan Song holds 60% of stock ownership. So which means that Kuchan Song has control over ABC Company, and it means that ABC Company is a related party. Again, following the related party rule, any bad debts, interest expense, and losses with a related party is a non-deductible expense. So that is why the loss of 60,000 is non-deductible because it fails to comply the related party rule. Then next is the cost of inventory destroyed by fire. There is a salvage value of 5,000 pesos. So when we say salvage value, the inventory was still sold even if they are partly destroyed, and the amount of proceeds from this sale is 5,000 pesos. And the cost of inventory is 19,000 pesos. Should there be no salvage value, the 19,000 cost will be reported as a loss. However, since there is a salvage value of 5,000 pesos, the loss shall be reduced by the salvage value. So instead of reporting a loss of 19,000 pesos, we will report a deductible loss of 14,000 pesos, which is net of salvage value. The next is the tax base of machinery destroyed by storm. So in the last paragraph, moreover, the machinery with a book value of 35,000 pesos also broke because of the storm and is beyond repair. Who decided to buy another machinery for 29,000 pesos. So this means that the machinery is totally destroyed. So again, what is the rule on total destruction? So once an asset is totally destroyed, the loss to be reported is equal to the book value or the tax base of the destroyed asset, and any replacement costs or the cost of new asset to replace the destroyed asset will be capitalized. So that is why for this reason that 35,000 shall be considered as a loss, then the 29,000 pesos will be capitalized as the new machinery. So again, the loss is the tax base, which is 35,000 pesos. So the 29,000 shall be capitalized. So now for the meantime, let us get the total. So the deductible loss is 57,000 pesos. Then the non-deductible loss is 117,500. And aside from these, we have additional information with regards to various fixed assets that were destroyed by the storm. So we have equipment 1, equipment 2, leasehold improvement, and a car vehicle. So these are the amount of repairs and maintenance. So which means that these four fixed assets were not totally destroyed unlike the machinery. So these are only partially destroyed. And the tax base of the part destroyed are as follows. Then we have a proceed from insurance. So now let us compute for the loss that is suffered from the partially destroyed assets. So let's start with equipment number 1. So for equipment number 1, we have no insurance. So we have no proceeds from insurance. So the loss shall be 9,000 pesos. And what is the 9,000 pesos? So the 9,000 pesos is the tax base. So why is the 9,000 pesos? So following the tax rule on partially destroyed assets, the loss that will be reported shall be the lower between the restoration or repair cost and the tax base. And if the repair or restoration cost will exceed the tax base, the amount of excess shall be capitalized. So which means that the repair cost of 10,000 pesos and the tax base of 9,000 pesos, the lower is 9,000. That is why the loss on equipment 1 is 9,000 pesos. So our deductible loss is 9,000 pesos because we have no insurance. However, since the repair cost is 10,000, so it exceeded the 9,000 loss. So what is the treatment for the 1,000 excess? It will be capitalized. So that is 1,000 pesos. So for equipment 2, we have a proceeds from insurance of 40,000 pesos. So between 60,000 and 56,000, the lower is 56,000 pesos. So which means that the loss is the lower amount of 56,000 pesos. And the deductible loss shall be 16,000 pesos because we have a proceed from insurance. So again, if there is a proceed from insurance, the reportable loss shall be reduced by the insurance proceeds. So that is why the reportable loss is 16,000 pesos. So again, the repair cost is over the tax base. So that is why we have an amount to be capitalized for 4,000 pesos. Now let's proceed to leasehold improvement. So for leasehold improvement, we have a proceed from insurance of 30,000 pesos. Then the repair cost is 50,000 pesos. Then the tax base is 52,000 pesos. So for leasehold improvement, the proceeds from insurance is 30,000 pesos. And by this time, the loss is the lower between the tax base and the repair cost of 50,000 pesos. So the lower is the repair cost. And of course, the deductible loss shall be reduced by the proceeds from insurance. That is why the deductible loss is 20,000 pesos. And is there an excess over repair cost over the tax base? There is none. So which means that we have no amount to capitalize for leasehold improvement. Then let's now proceed to the car vehicle. So the car vehicle has a proceed from insurance of 25,000 pesos. Then the tax base is 20,000 pesos. Then the repair cost is 32,000 pesos. So the proceeds from insurance is 25,000 pesos. However, the loss is the lower amount between the repair cost and the tax base. So that is 20,000 pesos. And how much is the deductible loss? By this time, we have no deductible loss. And why is that? Because the proceeds from insurance exceeded the 20,000 tax base. So instead of a deductible loss, we have a taxable gain of 5,000 pesos. And since the repair cost exceeded the tax base, we have an amount to be capitalized for the car vehicle, which is 12,000 pesos. So we can now compute for the taxable income. So let's start with gross receipts. The gross receipts is 3.2 million, then deduct the cost of services of 1.28 million pesos. So we have a gross business income from operation of 1.92 million. Now, before we deduct the expenses, let us look for other income subject to normal tax. So based on our problem, we have no income that is subject to normal tax other than the gross business income from operation. However, based on our analysis of the car vehicle, the proceeds from insurance exceeded the loss of 20,000 pesos, and we have a taxable gain of 5,000 pesos. And this is not considered as an income from operation, but this is an income that is subject to normal tax. So it will be classified as a non-operating income, and it's still part of the gross business income. So that is the taxable proceed from insurance, which is the excess over the loss. So for 5,000 pesos. So the gross business income is 1,925,000 pesos. Now let us deduct the itemized deductions. So based on the problem, we have an itemized deduction excluding losses of 512,000 pesos. Then let us deduct the losses. So how much is the deductible losses? So the deductible losses is 102,000 pesos. So that is why our total itemized deduction is 614,000 pesos. So our taxable income is 1,925,000 less 614,000 total itemized deductions. So it is equal to 1,311,000 pesos. So how did we compute for the 102,000 losses? So this is composed of the 57,000 pesos deductible loss that we have computed here in our table, then the losses that were suffered from the storm related to equipment 1, equipment 2, and leasehold improvement. So that is the composition of our losses. So this is our application of the tax rules on the deductibility of losses.